So basically what we're trying to do is, despite all the noise, see what has happened with Fortis is that, people are ignoring the core business and all the noise and news in terms of what the promoters are doing, what Daiichi is doing. That is impacting Fortis. So in the recent headlines, what has happened is just, and this is outside the core business, the Singh brothers resigned from the key positions, and then they were later accused of siphoning of almost $78 million. So these were in the headlines recently as far as Fortis was concerned. But the other important factor is that we don't know how they've performed financially for the last 2 quarters, because the second and the third quarter results are yet awaited. They have not come out with them, given the fact that there are different versions of what the company is saying and what some of the other people are saying. But now let's take a look at what's happening. Yesterday, after the big move, the current market price is 148, and the Bloomberg consensus estimate target, that's the consensus of all the brokerages that have reports on Fortis, is 196. That means the potential return is still 32% on the core business of Fortis. So analysts still remain bullish on Fortis Healthcare. Now, if you're looking at what's working for Fortis Healthcare, first of all is the fact that there are reports of takeover in multiple media agencies indicating that they will be taken over. The proposed buyback of assets from RHT is taken as a positive. Most of the notes that have come out have indicated this is positive. They've already announced the potential demerger of the diagnostic business, which will create value for the shareholders, but it's on hold right now because of all the legal issues. They are present in key geographies and therapies, which gives them an edge over the other hospitals, and we'll talk about the financials of Fortis in a while. And there is operational improvement and higher occupancy because most of their hospitals are now approaching 5 years, and post that is where they've started recovering the money. Their capex is factored in, and they will start improving efficiency and higher occupancy. So that's something that's working significantly for Fortis. Apart from it, now in terms of what is this deal with the Religare Health Trust. So they have bought in Religare Health Trust for almost 4,650 crores. Now this value and this deal simplifies the corporate structure because they're looking at a consolidation or consolidating all their India operations. Now post they will post this deal, they will get in a lot of dividends. So post the deal, it will be worth anywhere between 3,500 to 3,600 crores. That is the outlay that Fortis will have to give because of the deal for RHT. Now in terms of the debt that is there, they will have to take over debt of almost 1150 crore. That's the debt that they will have to take over, and they will save of almost 270 crores annually in terms of fees that they pay to RHT, and interest cost for Fortis Healthcare saving will be close to 75 crores. So this is what they get because of RHT, and what they get because of RHT is clinical establishments 12, greenfield clinics 4, and operating hospitals 3. So this will add to the muscle that Fortis already has. So this is what they get from RHT. Now the other factor is the possible suitors, and this is across media reports, especially the Live Mint and Times of India. So include TPG Exxon, General Atlantic, IIH was one of the primary, Manipal Hospital, VPS Healthcare. So all the names have actually come out. These are the potential suitors for Fortis. Fortis has already said that they would want to get sold over, but it's the legal Supreme Court verdict that is keeping Fortis unsold. Now look at the debt situation. Operationally, they managed to reduce their debt from 1,200. They brought it down to 597 crores. Then the debt again went out because of certain acquisition. Now it's at 625 crores. At one time, the debt equity was almost 3 times. Now it is sub 1. So that is something that is working in favor of Fortis at this point of time. So broadly, if you're looking at the financials, they seem to be doing well at this point of time.
How does it compare valuation-wise?
Yeah, so peer-wise, it is one of the most efficient hospitals if you look at it. Now, in terms of revenues, it is the second largest hospital in India with revenues of 47. We're taking the FY17 numbers because the others have, Fortis has not reported their Q2 and Q3 number. So they reported revenues of almost 4,500 crores, only second to Apollo Hospitals, pretty decent EPS of almost 9 rupees per share. Now, the other factors which we used to compare the hospitals was basically the length of stay and the revenue per bed. By far the highest as far as the other peer group is concerned, and the length of stay is the lowest. So in terms of efficiency, yes, it's one of the best run hospitals in the country. The other factors that we want to talk about is the valuation. The cheapest in the hospital say, where shall be the recently listed, is trading at 28 times, Apollo is 23 times, Fortis is trading at an EV EBITDA of just 20 times on an FY18 basis, and comes down to even 15 times on an FY19 basis. The only reason that it's trading at such a discount is the promoter related issues, which if this gets solved, they should probably get a better valuation. Margins, as far as margins are concerned, it's one of the lowest in the industry currently. In terms of margins, they don't score. The others are doing well as far as margins are concerned. So if you're looking at the other parameters, in terms of ROA, ROE, Fortis still has much lesser in terms of ROA compared to others, but it's in line with what the others are doing. Shall be because of higher operating margins is doing well, but Fortis is in line with has actually better than Apollo as well as Narayan Rudara. So they're doing well as far as return ratios are concerned. So that's the story of Fortis. So I think the only reason Fortis is not getting any kind of valuation is because of external issue, but the core business continues to be robust for Fortis.
Well, there are valid points as to why this would also happen. I mean, with all the surrounding.
Absolutely, you cannot ignore the surrounding headline news, especially at a promoter level. So.
So the operationally the picture looks okay. So if indeed they can get out of this muck that they are in, and I don't know if it's possible to say when would this happen in the first place?
I don't think you should even attempt it. I don't think it's it's slightly foolhardy to say that this is all going to go okay and everything will get resolved and the operations will be the only thing that matters. When at a company, at a promoter level, when there are so many issues, I think investors have to weigh both the operational performance and those promoter level issues. It would be foolhardy to do anything else.
Yeah, Darshan, why would people be talking about? I mean, why would Radhakrishnan Damani be, for example, interested in this? Is it essentially buying a well-run asset at a valuation and taking a little bit of a risk? Because it's a tiny toon investment, to be honest.
It's a tiny toon investment, no doubt, and not only Radhakrishnan Damani, even Rakesh Jhunjhunwala has a stake, and in all probability they know much more analysis than probably we've done. But the fact is that it's operational, it's the noise that is actually weighing down on the valuations of Fortis. What the steps that they've taken recently are on the positive light in terms of what they're doing with RHT. And with the takeover, if the Supreme Court allows, probably I'm not saying that we should buy or sell the stock, but what we are trying to say is the fact that operationally Fortis is not a bad run hospital. It's just that the noise that is covering the stock price.